Imagine standing inside a bank with a cardboard box packed with $1 million in crumpled $20 bills. You might think the teller will smile and take your cash to open a shiny new savings account. The reality of the modern financial system involves immediate alarms and federal investigators tracking your every move. Banks flag large deposits automatically to stop illegal profits from flowing freely into the legitimate economy. This leaves criminal syndicates with a massive logistical headache because paper money is heavy, highly conspicuous, and difficult to move. We will find out how a global banking giant actually modified their physical teller windows to fit massive boxes of cartel cash later. But first, you need to understand the fundamental three-step process that turns street cash into boardroom wealth. The three-step cleanse. The first stage of this classic process begins with a technique called smurfing. Criminal organizations break down massive mountains of cash into tiny deposits under the legal reporting threshold. Hundreds of low-level couriers visit dozens of different bank branches every single afternoon. These individuals drop off small amounts of money across separate automated teller machines scattered throughout the city. The banking software treats these transactions as completely normal personal deposits. This distributed approach completely bypasses the automated tripwires designed to catch sudden wealth spikes. Once the physical cash sits safely inside the banking system, the secondary phase known as layering takes over. This phase involves moving the money through a dizzying maze of digital transactions across the planet. A broker wires the funds to a trading company in Asia, converts them into European currency, and purchases electronics components. They scramble the digital paper trail so thoroughly that forensic accountants lose track of the original source. The primary objective focuses entirely on creating a labyrinth of financial noise. Investigators find themselves drowning in a sea of legitimate-looking receipts and wire confirmations. The final phase arrives when the cleaned money safely returns to the criminal boss through integration. The organization officially reintroduces the laundered wealth into the mainstream economy as perfectly legal income. They achieve this by purchasing luxury properties, corporate bonds, or high-end art collections. The boss can freely spend these funds on supercars and mansions without facing tax evasion charges. The money now looks identical to corporate profits earned by a tech startup or a real estate conglomerate. This three-step cycle forms the backbone of every shadow economy across the globe. The cash sponge. Certain industries naturally process massive volumes of physical paper money every single day. Laundromats, car washes, and busy metropolitan cafes represent the traditional gold standard for localized money laundering. A criminal buys a popular pizza place that legitimately generates $3,000 in weekly sales. The owner quietly records $7,000 in sales on the digital ledger at the end of the week. They manually inject $4,000 of dirty street cash straight into the cash register. The accounting software displays a wildly successful restaurant chain experiencing massive consumer demand. This classic technique succeeds beautifully because verifying individual slice sales remains an absolute nightmare for tax authorities. A bank executive sees a thriving local business making consistent cash deposits every single Monday morning. The business owners happily pay corporate income taxes on their fake profits to secure legitimacy. This tax payment represents a necessary operational cost for transforming street money into clean capital. The IRS accepts the tax revenue willingly because the paperwork matches the reported banking statements. The criminal mastermind effectively runs an expensive sponge that absorbs illegal wealth and squeezes out legitimate corporate dividends. Have you ever walked past a completely empty mattress store or a terrible restaurant that somehow stays open for decades? These bizarre establishments often survive solely because their true profits come from hidden financial manipulation. The business owners focus entirely on creating a plausible explanation for their cash flows. The physical storefront exists purely to justify the large volume of banking deposits occurring behind the scenes. They maintain a bare minimum of inventory to satisfy a casual inspection by a local zoning officer. The true value resides entirely in the clean bank account associated with the business corporate tax identification number. Many famous mobsters historically fell from power due to simple accounting errors rather than violent crimes. Federal investigators realized that proving the source of illegal funds was difficult, so they focused entirely on the unreported income. This shifted the tactical landscape of organized crime towards sophisticated commercial operations. Modern syndicates hire elite business graduates to manage their portfolios of storefront fronts. These professionals apply legitimate corporate strategies to maximize the efficiency of dirty capital absorption. The neighborhood bakery becomes a high-tech processing hub for international criminal proceeds. The global shell game. International commerce offers a significantly larger playground for moving massive amounts of illicit capital across borders. Trade-based money laundering utilizes the sheer volume of global shipping to disguise illegal wealth transfers. A corrupt exporter creates a shell company that pretends to ship 10,000 high-end designer watches to a foreign buyer. The container ship arrives at the destination port carrying cheap plastic toys worth a tiny fraction of the invoice. The buyer happily wires $500,000 to the exporter based on the falsified shipping manifests. The international banking system approves the transfer because the trade documentation appears completely valid. This mismatch between paper value and physical reality allows cartels to move millions of dollars with a single shipment. Customs officials face a monumental challenge because inspecting every single container at a major port remains physically impossible. The launderers exploit this logistical vulnerability by constantly altering their shipping routes and commodity descriptions. They might under-invoice goods to reduce customs duties, or over-invoice items to move capital out of a country rapidly. The entire system relies heavily on the chaotic nature of international maritime logistics. A simple stack of ocean freight bills becomes a powerful tool for global financial deception. Another legendary international technique operates through a system known as the black market peso exchange. Imagine a large drug cartel holding millions of physical US dollars inside a warehouse in Miami. They need to convert this American currency into Colombian pesos without wiring money through traditional banks. A specialized underground money broker steps in to buy the physical dollars at a significant discount. The broker then sells these dollars to legitimate South American merchants who desperately need US currency to buy American goods. The merchants pay the broker in local pesos back in South America, and the broker delivers those clean pesos to the cartel leadership. This parallel financial network eliminates the need for any cross-border bank transfers between the criminal organizations. The physical money stays inside the United States to pay for commercial exports, while the equivalent wealth appears safely in South America. The entire process functions like a dark mirror of the global banking system. Everyone involved receives exactly what they want without ever filling out a single federal disclosure form. The system survives because international trade demands a constant supply of hard currency. The line between legitimate business and cartel logistics blurs into absolute invisibility. To tie these international schemes together, syndicates rely heavily on the ultimate legal weapon called the shell company. These entities exist entirely on paper within specific island nations or secretive domestic jurisdictions. A shell company possesses a valid registration number and a corporate bank account, but it maintains no physical office or employees. A single anonymous trust in a tropical tax haven can control hundreds of these paper corporations simultaneously. The true beneficial owner remains shielded behind layers of nominee directors and complex legal trusts. This corporate fog prevents law enforcement from ever discovering who truly controls the underlying bank accounts. The high-end laundromat. The global real estate market serves as an exceptional vault for storing massive amounts of freshly laundered wealth. Luxury penthouses in London and mega mansions in Malibu frequently belong to anonymous offshore corporations. A criminal organization can purchase a $5 million property using a network of shell companies to hide their involvement. They can later sell the estate to a legitimate buyer and receive a clean wire transfer. The proceeds from the sale appear in their bank account as perfectly legal capital gains from a real estate investment. The subjective nature of property valuation makes real estate an incredibly attractive vehicle for obscuring large sums of money. Have you ever wondered why so many ultra-luxury apartment buildings in major cities remain completely dark at night? These glittering glass towers often function as vertical safety deposit boxes for international oligarchs and criminal syndicates. The owners treat these properties as pure financial instruments rather than actual living spaces. The physical concrete represents a stable asset that protects their capital from inflation and government seizure. A billionaire can store $50 million in a single high-rise building without attracting the attention of traditional banking regulators. The property market provides both anonymity and excellent financial returns over the long term. This elite level of financial manipulation requires the active cooperation or extreme negligence of major banking institutions. Some of the most prestigious banks in human history have faced staggering fines for ignoring blatant money laundering activities. Corrupt executives and compliance officers occasionally intentionally look away from suspicious transactions to secure massive wire fees and wealthy clients. A bank might process billions of dollars from high-risk countries without conducting basic background checks on the account holders. The institutional desire for short-term profit frequently overrides the legal obligation to report suspicious financial behavior. This corporate complicity turns global banks into the ultimate enablers of transnational organized crime. Offshore bank accounts and secretive tax havens provide the final layer of protection for this laundered wealth. Countries with strict bank secrecy laws refuse to share financial data with foreign law enforcement agencies. A criminal can route their clean funds into a private bank account located in a tiny island nation. This money can then be invested into global stock markets or corporate bonds to generate legal generational wealth. The legal barriers built by these tax havens make asset recovery almost impossible for international investigators. The dirty money has successfully completed its transformation into highly respected corporate capital. The corporate cartel. This brings us back to the wild story of the global banking giant that modified its physical building to accommodate cartel cash. Federal prosecutors discovered that one of the largest banks in the world had been systematically processing billions for international drug syndicates. The cartel leaders were so comfortable with the bank compliance failures that they designed custom boxes to match the exact dimensions of the teller windows. This design choice allowed the couriers to push hundreds of thousands of dollars through the windows in a matter of seconds. The bank eventually paid a massive fine, but not a single senior executive spent a day inside a prison cell. This shocking reality demonstrates that high-level money laundering remains a fundamental component of the global financial architecture. Understanding these dark mechanics reveals a powerful truth about the nature of wealth and systemic power in our world. The global financial system operates on rules that look vastly different depending on your net worth and connections. A regular citizen faces intense scrutiny for a simple cash deposit, while billions move smoothly through offshore channels every single day. This systemic double standard highlights the extreme importance of building your own financial literacy and independence. You need to understand how the global game of capital truly functions if you want to protect your own future. True wealth creation involves mastering the legal systems of leverage, corporate structures, and asset protection. The path to financial freedom requires you to think like a corporate strategist rather than a casual consumer. You can utilize legitimate shell companies, trusts, and real estate investments to optimize your tax liabilities and protect your hard-earned savings. The elite players of the world use these identical tools every day to maintain their dominance across generations. Your goal is to learn these exact mechanisms of banking and asset management to build a bulletproof financial foundation for your family. Focus your energy on acquiring cash-flowing assets that compound your wealth safely over time. Make sure to subscribe to the channel and hit that notification bell to join our community. Until next time, keep grinding.